Welcome back to Demystifying the Stock Market. We are now ready to start lesson number 4. So in lesson number 4, we are going to give you an introduction to charting basics. So why do we use charting? That's one thing that you need to understand and how you utilize it in your trading business. All right, so in lesson number 4, we are going to discuss why we use charting. We're going to give you some charting examples, and we're going to introduce you to the concept of support and resistance in charting and as an opportunity to potentially establish some trades. All right, so why do we use technical charting? So technical analysis, or using charts to identify trading signals and price patterns, in the beginning, when you start doing this, it's definitely going to seem overwhelming. And the reality is this, is that charting is a discipline that goes back decades. It's constantly being refined, and you can easily go down a rabbit hole and get very confused very quickly. My recommendation to you in the beginning is that you take some entry level or beginning charting classes, those of which we're going to be building out and providing, offering. But don't allow yourself to get overwhelmed. There are ways to establish and keep your charting simple. For me, when it comes to charting, simpler the better. I don't have a ton of signals. I don't have a ton of things on my chart. If the chart starts getting too messy, then there's a problem. So really, at the end of the day, developing a strategy to keep your charting simple, at the end of the day, makes a lot better sense. So as a beginner, you first need to understand why technical analysis works as a window into market psychology and identify those opportunities to profit. Technical charting tells us, not to an exact degree, because again, none of us have a crystal ball, but technical charting gives us insight to what the stock may or may not be doing, because the stock itself does create a heartbeat. The chart itself is the heartbeat of that stock. And what you'll find over time as you start to trade is, as support and resistance is mapped out on a particular stock or a particular index, there are long-term levels of support and long-term levels of resistance. And you'll notice on days of heavy buying or heavy selling that sometimes when the market closes, the market will close out the stock that day on a level of support or resistance. So it's really interesting when you start charting and seeing the patterns, and it starts to give you some insight on what the stock might do. Again, it's still not a 100% guarantee. There are no guarantees when trading in the stock market, but it certainly starts to give you a little bit of an edge when it comes to trying to determine what that stock may be planning to do. So when you're utilizing technical charting, you want to focus on a particular trading approach and develop a disciplined strategy that you can follow without letting your emotions or allowing the second guessing to get in the way. And that's why we use charting, to help manage those emotions and to try and get to the point where we're no longer second guessing about what's going on. Okay, let's talk about the different types of charts that are out there. So line chart. Now within TradingView, which is the charting platform that I use, you can toggle between different types of charts. So the basic chart is a line chart. So the blue line here is the stock itself, right? Going from $403 down to about 320, 325-ish, right? So if you follow the blue line, you are following the heartbeat of that stock. And as you can see, this stock, which actually it's an ETF, not a stock, it's the QQQ that we discussed in our previous lesson. You can see that it's been selling off since the beginning of 2022 down to July. So this line chart, the reason you would want to turn or show the line chart is because it's a great way to set up lines of support and resistance. You can also do it with candlestick charting, which we'll talk about next. But I personally like to use the line chart to try and establish some of my indicators. So I flip into a line chart, and if I'm looking for resistance, here we go. I've got 1, 2, 3, 4 points here where the stock has bumped its head against about $367. So that is a level of resistance. Anytime you have 2 or more points like this, you can create a level of resistance. Now, some levels of resistance are weaker than others, The more touch points you have hitting that resistance line, the more established the resistance line becomes. So now to the downside, it's a little bit weaker here, right? Touch point here, kind of breaks through here. So this is definitely a weaker level of support. We would call this support. Support's on the bottom, resistance is on the top. The key here is it broke through resistance. So these green lines indicate support and resistance. The yellow lines are the channel, right? So there can be channels that go sideways, channels that go up or in a bearish position, channels that go down or in a, bullish position, or channels that go down in a bearish position. So this channel here, because it's trending down, is a bearish channel. And you can see the QQQs have been trading within this channel now since basically January of 2022. Broke out a little bit here, but recovered and went back into the channel. So this starts to give you an analysis on what the QQQs are doing and will help you establish trading opportunities based on the indicators within this. So that's one of the reasons why you would want to open up a line chart. Now, from a day-to-day perspective, we use candlesticks. Now, candlesticks, if you want to learn more about it, there's tons of information out there on YouTube about the history of candlestick charting. It was started in Japan, and it was started by somebody, I believe was a rice farmer, and he was using candlesticks to determine pricing on the commodities. So candlesticks have a long storied and actually very interesting history that if you're interested in, is definitely worth the read or watching a video on. But the candlestick charting is just that. It's candlesticks. So green means that the stock closed higher that day. So green means bullish. Red means the stock closed lower that day. So bearish. So green means the stock closed higher that day than it opened. Red means the stock closed lower that day than it opened. So it's bearish. So those are the color codings for candlestick charts. Now you can see there's all types of different candlestick charts here. You have this one right here with a wick at the bottom, right? So the wick at the bottom are sellers. So when I look at this candle here, where you have half a body and then half a body of wick below it, what that tells me, looking at the history and that day, it tells me that the bears and the bulls fought that day. There were buyers, there were sellers, they were just about even, but the buyers were able to outpace the sellers to push that stock higher for the day. But this long wick, that's the sellers. The full body, those are the buyers. So that's a battle in between the day. And you can see it closed out higher. Vice versa here. The next day, the stock closed down lower, and the bears and the bulls battled at it again, but the bulls lost, right? The sellers overpowered them and pushed the stock price down that day. Okay, then you've got symbols like this, a spinning top. You have dojis, right? There are a variety of different candlestick symbols, all of which are taught in future classes dedicated to just charting. Okay, now the next topic on candlesticks, once we get the slide, there we go, hollow candlestick charts. So the point of using a hollow candlestick chart is just it opens up the body for you. So it gives you another quick snapshot, right? So the open candles are going to be your bullish ones. Your closed bodies means that it was a bearish day. So most people, it's a preference whether or not you want to use hollow candlesticks or whether you want to use full body candlesticks. I personally like full body, but as you develop your trading business, you'll decide which candlesticks you prefer. And we jumped ahead. There we go. All right, let's talk about support and resistance. So support and resistance, which we touched on. Support is where a stock finds a floor. Resistance is where a stock finds a ceiling. So there is a trading strategy around support and resistance. If you can watch a stock, learn its heartbeat, and chart it, and develop and see the patterns of support and resistance, it's an opportunity for you to trade that stock within the support and resistance channels. So let's say, for example, a stock trades between a support and resistance of $20 and $40. So you know when the stock gets close to $20, it's a potential opportunity to buy that stock. Provided that support of $20 holds, in theory, the stock should bounce off the $20 support and continue to rise back up. It allows you to make money as that stock goes back up. Same thing with resistance. When that stock hits the $40 ceiling, if it holds the resistance and doesn't break through the resistance, it gives you an opportunity to short the stock and earn profit as that stock comes down from 40 to 35 to 30, etc. So that is the fundamentals behind support and resistance. So the example here is going to be on the ARK Innovation Fund. ARKK is its ticker symbol, ARK Innovation Fund. So this is actually an ETF. So this chart here shows you, well, one, it's been selling off. ARK is all innovative and technology companies, so it's taken quite the beating here in 2022. But more importantly, as you look at the chart and you see what's happening here, this is a major resistance point for ARK, right at about the $44 range, 45. So when you chart this out, and if you're interested in ARK as a trading opportunity, this would not be the area that you'd want to enter the trade. Because why? Because if you enter the trade at $43.71 and you have heavy resistance at $45, there's a high probability this stock is going to go to 45, hit its head on this, turn and come back down. You don't make any money that way, and you'll end up getting stopped out. So if you are looking at this as an opportunity, your consideration for an entry point has to be well above the $45 mark. You need the stock to break above 45. It needs to break the resistance, and it needs to confirm that it's going to hold above that. So you want it to break and you want confirmation. Then it may potentially set up for a good trading opportunity. So that is how you look at support and resistance as one tenet to not only charting, but also as an opportunity for trading opportunity. Okay, and that wraps up lesson number 4. So in this lesson, we talked about understanding line charts, the introduction to candlestick charts, and we discussed the basics to support and resistance and how that can play with both charting and for trading opportunity. So you now are 4 lessons through. Hopefully you're filling that workbook up, and we will see you back here shortly for the 5th and final lesson.